like to know why the folks at CBA have materially revised their Australian dollar forecast in the past couple of days. So Joseph Capurso is joining us from the Commonwealth Bank. Can we start there, Joseph? I mean, talk to us about the sharp revision, because I believe your forecast previously was at 82 US cents by year's end. Correct me if I'm wrong.
81 was our previous forecast. Now we're thinking somewhere in the order of 72 US cents. And the main reason for changing our Aussie US forecasts is really just the US dollar leg of that currency pair. So we're now forecasting the US dollar to rise against pretty much every currency that we monitor over the next 6 months or so. And the main reason for upgrading the US dollar leg is because of the sharp change in words from the Federal Reserve in the US. And of course, they've also changed their now infamous dot plots on where they think their funds rate, their short-term interest rate, is likely to go over the next few years. So it's really a stronger US dollar story rather than some problem in the Australian economy.
Yeah, okay. Well, we're comforted by that. But when it comes to that stronger US dollar story, how pronounced do you think that this could be?
So in terms of how pronounced, I think the US dollars index is probably can lift another 3 or 4%. So not a large amount by any means, but it's really is stopping the downtrend that we saw in the US dollar from most of the second half of last year and the early months of this year. So I would just think of it as an interruption to the downward trend in the US dollar of, like I say, 3 or 4%. But I think as you get into early next year, the US dollar starts to fall as the world economy or the rest of the world catches up with the United States. And that sees most currencies under our coverage increase against that falling US dollar. The US dollar is a counter-cyclical currency, so it tends to do poorly as the world economy does better.
Yeah, okay, we've got that. So when it comes to the short-term determinants for the next leg of the US dollar, I mean, next week we do get quite a lot of data, but we get consumer and producer prices, as well as industrial production and retail sales. I mean, those are really big data points coming next week, correct?
Yeah, they certainly are, especially industrial production. Producer prices only have a fairly soft relationship with consumer prices. Consumer prices, of course, front and center for the Fed and for markets. Interestingly, though, the long end of the US bond market, yields have been coming down quite a long way in recent weeks. And that, I think, reflects that the market thinks that the Fed is going to tighten. And as they tighten over the next few years, that will push down US economic growth and US inflation over the long run.
Joseph, have we learned anything new in your view from the RBA, but more particularly from Phil Lowe speaking post-statement and today as well? I mean, my reflection is that they're just so on message in terms of the focus being on inflation, employment, underemployment, wages. And wages growth was absent pre-COVID and pre-pandemic. So where is the focus for you now at CBA when you're listening to any communication that will continue to be forthcoming from the RBA?
So the RBA governor this week has acknowledged the link between changes in immigration, influencing changes in labour supply in Australia, and therefore wage growth in Australia as well. So that's something that they haven't spoken a lot about. They have a little bit in recent years. It seems to be gaining greater emphasis. In terms of the key data points, the Reserve Bank has made it very clear that they are targeting inflation, not wages. But where wages fit in is that if inflation can get up to the 2 to 3% target range, for the Reserve Bank to be confident it's going to stay there, they need to see wage growth around 3% or more to be confident that inflation is going to stay in that band of 2 to 3% over the medium term.
So that leads me to question what you guys and ladies are speaking about at CBA in terms of that whole immigration migration debate, because it certainly does seem as that, yeah, it's heating up. So you've got a choice between, in a way, keeping immigration levels lower to ensure that we do see some of that wages growth, but then that comes, at a cost of overall economic growth and potentially even productivity growth as well.
Yeah, they're both two very good points. So immigration provides both supply and demand, whereas something such as foreign tourism provides more or less just demand. So you're right, there are two sides of the coin when it comes to immigration, both supply and demand for labour. The governor today did say, look, it is quite difficult to know which one is larger than the other at any point in time. So you're right, it's a very good point. And the Reserve Bank is still grappling, trying to weigh up those two conflicting trends there.
Yeah, okay, so I'm going to take from that you are having more conversations around the economic meeting table there at CBA. So what next here in Australia is most interesting to you on the economic front that can help investors form the view as to where this economy is going and potentially where they want to put their money to invest?
So one of them, just to sort of stay on immigration, is when the government feels that the pandemic is more or less under control, enough people have been vaccinated, what I think the market participants will be looking for is, well, in this post-COVID, post-pandemic world, what are immigration levels going to look like? Because that will feed into people's expectations for both economic growth, wage growth, and of course interest rates as well. So that is very important. The other thing, of course, that market participants want to know about is what is the government's strategy for the budget. In the last year and a half, they've been willing to, for the federal government budget to basically be the shock absorber for the economy. Once we're through that period, though, and we're all fully vaccinated and the economy is more or less back to potential, what then will be the budget strategy for the long run? Is it to have budget deficits for years and years into the future, or are they going to start to focus on pulling down the deficit? Both very important issues for the market participants.
And Joseph, do you have any in-house view at Commonwealth Bank as to when we will have an election called here in Australia? Because that will continue to colour all those conversations.
That's probably outside of my field of expertise, but if my memory serves me correct, I think the federal election must be held by about May next year, so the clock is ticking.
Yeah, right. Well, we're all sort of keeping an ear out for that one. Joseph, always a pleasure to speak with you. Thanks for joining us.
Thank you.